Good morning, everyone. Welcome to the opening playbook for Monday, October 6th, 2025. I hope everyone had a good weekend. I hope everybody owns 1,000,000 shares of AMD. And we're going to get started here. How you doing, Nathan?
I'm doing wonderful. Don't own 1,000,000, but own quite a few. So today started off about as good as I could hope for a day to start off. Now I will say, I sold half my shares pre-market within like 5 cents of that 226.71 high, but I sure wish I sold all the rest because we are down about $18 a share since the open. So in one hand, I can't complain, and on another hand, I'm still going to find a way to complain. That I really wish I just would have sold the whole best, the whole kit and caboodle there. But anyway, yeah, it's been Dave. It's been a roller coaster of a weekend for me. I watched Penn State suffer probably the most humiliating loss of my lifetime on Saturday. That was just painful. And then I had my big golf match yesterday in the season-long match play that we got to the Final Four in, and we got obliterated in that. So I was really down in the dumps, Dave, until AMD decided to rescue me, and now we're living back in the highs.
I'm glad somebody at Penn State called AMD up and said we need a rescue, and they did their thing. So
we got the rescue in place,
yeah.
But no.
Does Coach Franklin still have his job?
Dude, I was hoping they were going to leave him on the tarmac after that. That was.
He does,
horrible.
huh?
Yeah.
There you go.
But just got to run the table from here. No big deal.
Yep. All right. I was having issues before, but now I think I'm Nate. What I did, I don't know if you saw my Slack. I was like, I can't hear anyone.
Oh, I didn't even notice your Slack. Sorry.
It's all right. It's all right. I was trying to set my microphone up because it flipped back to my computer for some reason, and I accidentally set my speaker as my microphone. So
that's not going to get the job done.
That's like that's rookie mistake 101.
Yeah.
Nice week in pop for you, Nate.
Yeah, awesome weekend. Speaking of things that happened over the weekend that were kind of a nice pop, I had set an order for a big chunk of my Bitcoin, my actual Coinbase Bitcoin, to close out at 125,000. I think it was right about half to close out at 125,000. That was probably 4 or 5 months ago, maybe even 6 months ago, that I set that order in Coinbase, and I completely forgot about it. So then just over the weekend, I just got an email, hey, your X amount of Bitcoin has been closed out. I was like, oh wow, it hit 125K kind of right on the dot, and that got closed out. So I took some profits there, took some profits on AMD, but I still think we're in a pretty good position for more on Bitcoin. I've got that options position still open and going for a good bit more.
I've got actually something to show you guys today. Actually, I was going to show you yesterday. Well, I was going to show you tomorrow in the breakdown, but I have a new cool Bitcoin chart. Hey, Nate, not to brag too much, not to brag.
Okay, hit me.
But I am 1-0 on my weekend trades now.
Nice.
If you guys took that one over the weekend. Yeah, we're undefeated, Nate. I know you're probably pretty jealous.
Yes. Yep. Pretty jealous. We missed our weekend trade getting an entry by like a couple, like maybe $1 on the SPY because of that RSI filter. So that's kind of annoying. But like I said last week, we've done a good job filtering. I can't complain too much. We've done some, some dancing through the raindrops, as they say. So can't complain a whole lot. But yeah, I mean, I'm pretty interested in how aggressively Bitcoin can go from here, and just kind of how vertical it can go. I have my target all the way up at 80 on IBIT, so we're still over 10% of the way out from that, but we've got a couple months to go. So if we get a kind of a crazy run like we had, if you guys remember November, everyone remember November, we had a big run at the beginning of the year, and then it kind of went into a sideways slope. Let's see, that would have been like March all the way through October. And I think, Graham, you and I were both thinking like, geez, when are we going to get out? Like, when are we going to start moving again here? It felt like forever. Mm-hmm. And then we got a big pop at the beginning of November. Let's see, that was from 39 to 43 if you're going on the IBIT numbers. I don't remember exactly what the actual Bitcoin numbers were. I think crossing right about like around 110 there, or back over 100K at that point. And it ended up going from 38.80 to 59.20 in like 4 weeks. And so that, I don't know if we're going to get that kind of run here where it just stacks big, massive bullish candles on top of each other, or if we're going to get a little more kind of grindy building. But all of that to say, sorry, that was a long way of saying, if we do get that, guys, if we just get there way ahead of schedule, I will close that trade. So I'm not going to, like, if we hit, $80 or $82 on IBIT, I'm not then going to sit on that trade for 3 months hoping that it stays above that level. I'm just going to get out and close it at that point. If it is a little slower and a little more kind of consistent build, then obviously I will hold on to it.
Love it. I'm going to show you. I'm waiting for there we go. CLSK is over 800% now. So I had to show you guys a screenshot.
Are you sharing your screenshot of CLSK?
Not yet. Oh, no,
okay.
No, not yet. But I do have a cool chart to show you guys. And if it's cool, I'm going to send you in the vortex here. I also want to show you some pretty cool things that came across my desk this morning too. Here's my CLSK trade. It's up now 811%, Nate.
Wow.
Nate's like, we like to be competitive. We like to have fun. I think Nate's taking the upper hand in the last few weeks here with nailing a little bit more picks than me. So I got to do what I can to try and earn my keep here. So this is all I can show for you guys right now. CLSK. But here's really what I want to show you guys. Enough of that fun. Let's look at the money supply. We talk about just follow the money, liquidity, what's going on in the markets. I've shown you this chart on the right here before a few times. This is the updated version. I just remembered I got another really cool chart to show you guys. Man, I'm fired up for this Monday. This orange line here is what you see, the M2 total money supply moved forward by 11 weeks in this case, 11 weeks ahead. So you just take that data and shift it 11 weeks. The theory is when money enters the economy over the next few weeks, it gets pumped into the markets, pumped into Bitcoin, pumped into gold, all sorts of other assets like that. So if we just shift it forward, we can get a good idea of what may be to come. So here we have that M2 chart push forward 11 weeks. And here's where Bitcoin's at right now. As you can see, I mean, it's almost a 1-to-1 correlation on Bitcoin. Pretty wild, where Bitcoin just follows the money supply. What does this suggest, guys? Look.
Sorry, how far forward did you say it shifted?
11 weeks. So it's about 3 months, a little under 3 months.
It says right there, 11 weeks, right?
Yeah, so this is like by Christmas, guys. I want you to see this. I think this is so cool. I've been telling you for 2 years now, my price target. And I said this 2 years ago when there was no way to see money supply 2 years in advance. But I used the numbers, the data, and I said, my target's 150 by the end of 2025. Look at where the money supply says the target is. The exact same number. I think that is so cool. So stinking cool. We touched 125 yesterday, actually. We'll see if we keep on going. Actually, we're at 125 again right now. So we'll see if we keep going. This suggests by end of year, right at, look, between 145 and 155, right around $150,000 on Bitcoin. Pretty awesome. Same sort of thing here on the S&P 500. Now, I'm going to give you guys my targets here in a bit. My target's actually a little bit higher than this. As you can see, the S&P tends to outperform the money supply. So here, the blue line is the S&P, slightly above, slightly elevated over the money supply. So right now, we're actually still in a bit of a lagging catch-up trade on the S&P. I think this is going to keep going. My target's actually 7,135 on the S&P by end of year. So this one shows right around 7,000. But I'll walk you through my data here in a second to show you that. And then I just remembered I've got another cool chart to show you. So let me just clean up my slides here. I've been looking for this one, and finally someone, Thomas Giegers, made this one for me. Nice guy. Don't know him. He posted online. I'm stealing it here. Our Bitcoin halving cycle chart. I've only had the chart updated to about here for so long. But this guy was nice enough to go ahead and update it for us. He didn't know he's doing it for us, but he posted online, so I'm borrowing it here to show you where we're at in the halving cycle, right? Every 4 years, we get this Bitcoin cycle where the bear market, pre-bull, where it's kind of quiet. For us, that was 2023. Then we get the halving event, right here. And that's when we get that first start of the 2-year bull run. And now we're at that back last leg here where we normally see that banana type squeeze on the markets. This is Bitcoin on the Bitcoin. So 2021 right there, 2017 right there, 2013 right there. That's a monster. Beautiful, beautiful. This is where we are now. Perfect timing. Everything's lining up for Bitcoin to run to 150. Again, by end of year, my confidence, if I could put a number on it, is about 98.9% confident that we're going to be at $150,000 by end of year on Bitcoin. So that's about 25 grand per coin from here, which is what, 20% on Bitcoin, give or take. Very, very good, juicy returns here. That's just on the underlying. If you take some of our options, hopefully you can do even better. So I'm very, very pumped up about that.
So you're saying I wasn't even aggressive enough on my big $100,000 trades, what you're saying?
I don't know. I don't know about that. It depends. What are you willing to lose? Like I always tell you guys, your position sizing depends on how much you're comfortable losing. So never go all in, Nate.
Of course, never go all in. Let me real quick throw this on here, guys. This is our QQQ two-way trade that we put on. Got a pretty good pop in the queue. So like I said, I normally wait and see what we get. I'm going to put a target in here for about 82 cents. That should be about a 30% ROI there. A couple $100 win if we can get filled for that in the next couple minutes. You can see we're up 0.66%. It's about $1.20 more than we needed for the queue. So just so you guys can see that in real time, that is the exit order. Notice how that was all one ticket. You can see it now here, all in one ticket. Let me cancel and replace it just so you can see it again. I've got all 10 contracts of the calls, all 10 contracts of the puts, all in one ticket, 82-cent credit. Doesn't really matter if it's good till canceled or day because they all expire today anyway. And then you send that order off, and that'll be a working order. My assumption is that if the queues can even hit 608, that'll probably get filled at 82, or even if they just hang out at 607 for another hour, should hopefully get filled there for another one. That would make us 4 for 4 on those two-way weekend trades. So those have been fun to do. I like when the market's a little more volatile, like it's starting to get. The VIX is not really doing a whole lot here. I don't know if I have the VIX open right now, but let's see what it's at. I lost it.
It was almost 17 the last time I looked.
Let me go here. There we go. Yeah, 1690. So, we're getting a little bit of life from the VIX, but obviously nothing to write home about. But it does seem like the market actual movement is starting to pick up some. And they don't necessarily go hand in hand. Oh, there it is. I couldn't find it on my massive watch list. They don't necessarily go hand in hand. So we could see a little more speed in the market without the VIX, getting up into the 20s. And so I think over these weekends, having something that plays it in both ways is a nice just buffer to have. If the market does slip and have a 2% drop over the weekend, you've got an automatic profit on one of those trades. Now, Graham, I know you're going to recap some of the seasonality stuff that you talked about. I'm not sure everyone's going to get a chance, but we're going to cover some stocks in our watch list from different tools. That does beg a very, very important question, though. It begs the question, am I allowed to give them an automatic pair trade, or is that still disallowed until future notice? Because I told them on Friday I was going to give them one, but I couldn't show it to them yet because you banned me.
It's officially allowed, Nate. We will let it. We'll let it slide here in the opening playbook.
All right. So I'll give you guys a pair trade. Should I start with that one? Maybe I'll start with that one. Let me share my screen here. All right, guys. So this is what I told you. I think I had a pretty big breakthrough across a couple different things that I was doing with as it relates to the profit pair strategy, and I'm gonna walk you through that here. Well, actually, I'm not really gonna walk you through a whole lot, to be honest. I'm just gonna give you a trade. We'll do the walkthrough at a different time, but you will at least be able to see what I am looking at. So let me share this. All right. Does everyone see this? Should be able to see my profit pair kind of testing platform
Yep.
up here. And the breakthroughs I had have to do with a couple of the metrics you see here, the expected move, the ATR, the 30-day change, all kind of based on some of the metrics that I want to update with profit pairs. I'll do a training on that at some point, but going through this logic on pair trades is pretty tumultuous if you guys have ever seen me do it, especially once you finally get into the trade and you're actually looking at the options. Okay, can I actually trade the options? How many contracts per? But really, if you want to do it the right way, which frankly I haven't been able to do a whole lot, you want to actually compare the move to what the stock typically does. In other words, how quickly can it get into profit? You hear Graham and I talk about the expected move and overcoming implied volatility and all kind of stuff like that. And so what you'll see here when I click this button is it actually going through the logic to find that. I think it's pretty wild how far it's come. I guess it was like Tuesday maybe that I felt like, oh my goodness, I think I figured something out here. I can get it to do this logic automatically. And since then, I've come a pretty long way. So let me show you what happens here, and you guys can give me a yes in the chat if your mind is blown his mind the first time it actually went through the sequence. So it's going to find it. It's going to go through it's going to go through the entire engine of the stock database in real time and look for, every single stock available. Actually, you know what? It's 10 a.m. So I might not be able to do this yet, Graham. I might have to wait because at 10 a.m. is when it re-triggers the database, which might mean it actually takes like 40 minutes before it can even get through step one here. So I might have to actually come back and do it later. I just realized what time it is. It's doing that initial run. So let me see if it's going to use the previous database. I'll give it a minute, but if not, I have to give it like 40 minutes because one of the core things with profit pairs is that if you really want to do it right, you kind of have to consider every stock and every sector. And so the initial database is like over 4,000 stocks. And then you have to pull in the options on all 4,000 stocks and the expected move on all 4,000 stocks. So the way it's set right now is it actually runs that entire database twice a day. One of the times is at 10 a.m. And so it's probably doing that right now, which means we're probably actually 40 minutes away from this giving us a trade. So maybe I will pause and come back and then show you guys once I actually have the database uploaded and or updated, and then we can go and do it there. Or I can just have it run on the current one. Let me see.
Well, it looks cool.
Hold on, I'll see if I can do it on the quicker way. Hold on a second. Let's see if I can do it this way.
Graham, earlier you were talking about the competition between you guys. And I think it's funny because it like what you were showing this morning follows the general description you give all the time about how Nate's typically going for smaller wins and higher win rates. And you're going for the big swings and all that. And you're like, well, the one I have to show you right here is 800%. So I think that fits in the mold.
Yeah. It's just, whatever your cup of tea is, hopefully we can meet it one way or the other, whether it's me or Nate.
Yeah. But I think, overall, you guys have a pretty similar approach. And you're not going for such big swings that your win rates are bad. And he's not going for such high win rates that his returns are terrible. So you guys are still just on opposite sides of the midline, maybe.
Hopefully we complement each other. That's what we're going.
Yeah. Well,
Remember,
you rarely.
I hear you getting filled for trades all over the place over there.
Me?
Is that you? Is that your Thinkorswim dinging over there?
No.
Oh. I guess that was my Thinkorswim dinging.
I didn't hear anything. So.
Oh, that was that two-way trade. All right, never mind.
Cracking me up. First look here, guys, for you at the. I thought I was going to be able to drag this. That'd be cool. Oh, can I? Oh, that's kind of neat. All right. First look here at the on the clock stocks dashboard. The members haven't even seen this yet. They just got upgraded. I just let them know about the upgrade last night. This is a first version I've gotten back from the team, but I just want to show you guys here how it works. Of course, you can go to any date on the calendar, flip through it. You can look at what's coming ahead, what's already happened, the things running for us. It's pretty stinking awesome. We click today, right? Monday, October the 6th. Number one best signal is FAST. Check this out. 2024, 2023, 2022, 2021. Notice anything? It's gone up each of those years on this 29-day hold period. Now, again, I'm still tuning it up. Going to make sure that the options are working, the logic works. I'm going to pretty this up a bit. You guys know I like my visual, so I want it to be very easy to read. We see entry October 6th, and it would just do the math for you, tell you exit date is November 5th or whatever that may be. Make it real pretty for you guys. But check this out. I love how it shows. Look, you can just click through it. It pulls the chart too. Historical performance of this ticker on each of the last 10 years. Super, super cool. You'll be able to come here, go to the options, get the options logic. I don't even know if it works right now exactly. The team told me they're still plugging the options details in right now. Yeah. So this isn't active yet, but over the next week or two, this thing's going to be polished up and running. Look at this. The average return of FAST over the next 29 days is 9.5% average return. Also tells us the median return, the minimum return, the max return, and the standard deviation. Pretty stinking awesome. But that's not all, Nate. This has me fired up. Fast is number one pick, right? Number one best signal. Scroll down. We don't just have to trade fast. We also have Costco here. Now you can see there's two different ones for Costco, 29-day hold time and 27-day. But it's cool to see that we also have all of these winning year after year after year on Costco, all the data right here. And once they plug in the options logic, it'll be pulling the options right through as well. Super, super pumped about that. Obviously, we get a full calendar here. So this is tomorrow. CDNS, AJG, which I love AJG. Good to know that's seasonally supposed to be heating up for us. Anyways, just showing you guys this right now.
Does that mean my PGR is going to heat up?
Typically, they work pretty close together. So hopefully.
I need PGR to just do what AMD did. Help me out with a nice, 35% overnight move. Get me back up top on PGR.
Yeah, you do need that, don't you? I sold PGR for a loss. I gave up. All right. Well, Nate, if you don't mind, I guess I can jump in just to some basic seasonal training. We covered some of this information last night. And then at the end, I'm going to talk about how to maybe play what I see coming. Maybe the best way to do it, just buying stocks that outperform when the market's really, really hot, because I'll give you guys my Q4 prediction. I'll give you my full year prediction as well. And I'll walk you through it step by step. Now, when we look at data, we look at numbers. I'm going to share my screen here again. I apologize. I chopped up some of this from last night's presentation, so it may not be perfectly polished. But we like finding data like this, right? We like finding information and numbers that can point us to a general consensus or general direction for the stock market. So we know, like with the money supply, we know that there's a pretty close correlation to when money enters the economy, stocks go up. When money enters the economy, Bitcoin tends to go up, right? We can see that here. Another data point here. This is that Bitcoin one I showed you, the halving event. We'd like to see patterns, cycles, things that repeat. We can see this 4-year halving cycle. This is just another data point that we like to look at. So I'm going to walk you through some of the basic data points that I like to personally start with. There's endless amounts of data. I've got a cool little, I think it's cool, a fun little analogy for you guys here on kind of how it all works. But I don't want you to get overwhelmed or bogged down or anything like that. But I do want to walk you guys through some of the basics here. So one thing that I always like to start with when making my analysis is just general market seasonality. How does the stock market perform month to month, week to week, day to day, you name it? Here's a monthly breakdown since 1990. So you can see January's positive. February is normally pretty flat. March and April are normally really good. Let's look here. June is flat. August and September typically are down months. All right. Doesn't mean it's always going to happen, right? We saw it buck that trend this year. But historically, we know generally it's a softer month versus October, November, December, very good. So again, I think I do a little recap here. Yeah, with the glance, you can see why some suggest selling a man going away, right? June is flat. August and September are typically ugly. They say spend your summer having fun, not watching stocks go nowhere fast. On the flip side, you can see just how good October, November, and December, which is Q4, how good those months typically are seasonally. We're going to get a little taste of that today, maybe with the markets doing quite well. Another great way to look at basic seasonality is to break it down even further. So here is S&P seasonality on a bi-monthly basis, or basically every 2 weeks. So how does the S&P typically move on the first half in the back half of each month. So let's put this into practice here. We know that October, this month, is typically a bullish month. That doesn't mean it always is, but on average, October is a very good month for stocks. But if we break that down even further, we can see that it's typically the first half of October that makes the lion's share of the gains. It's actually the third best 2-week period in the stock market. Of course, the back half is great too, right? Also positive, but you definitely don't want to miss out on the first half. Likewise, we know that the last from that last seasonal chart there, that December is historically a very good month too. It's very bullish in the stock market, about the 5th or 6th best month out there. But if you break it down even further, the first half of December here, 1H December, it's the first half of the month, rock solid, positive, no one's going to complain. However, you want to really make sure that your ducks are in a row for that back half of the month, the Santa Claus rally. That's the 4th best 2-week period in the stock market. Markets average over 1% across the S&P. If you're looking at individual stocks, they do even better. It's also what we call the Santa Claus rally. Now, this is just very ground level basics of how we can gain an edge, and we can keep going from there. S&P sector performance by month, if you break it down and say, hey, we know S&P is solid in October, but what's the best way to get the most bang for our buck? So again, S&P is strong in October. We break it down across the 11 sectors here. We see that technology is the top way to get the most bang for your buck. And I don't even know. I haven't looked at the sectors yet today. Has anyone looked at the sectors today? I have not, but now I just did. I cheated. I just looked at it. Let me see if I can pull this up here. Or it's nope, my screen because it's blown up. Does anyone notice? I don't know if you can see. It's kind of small. Which sector is on top today? Let me make this bigger because it's cool. It's not going to be every day, but I think it's fun when this all lines up. When what we're teaching comes into practice. Best sector day, technology. Should anyone be shocked that we are at the beginning of October? It's the 3rd hottest period of stock market action all year long. 3rd hottest 2-week stretch, and technology typically performs the best. We just know the past data. We did not know that technology was going to be up today. It just so happens that when you know what's happened in the past, well, it can happen again in the future. And knowing enough data, you can put odds in your favor. Right now, we're seeing tech red hot for us. So historically, technology is number one. Also, for October, typically financial staples and healthcare tend to outperform. What about November? Same thing. We know November is very, very good, but can we get a little bit more bang for our buck? Can we get a little extra juice from our squeeze? Well, in November, you're still going to want to have tech exposure. Tech is the number one sector for November, but you'll also want to look at industrials, right? Like the GEs of the world, HWM, GEV, those stocks that have been very good to us. Materials, discretionary as well. Now, this doesn't mean you can't trade a stock outside of those sectors, but by sticking in the sectors when we're seasonally strong and just limiting down to the best of the best, we get a little extra wind in our sails, hopefully taking our boat a little bit further. Now, when it comes to these data points, there's all sorts of things we can layer in. And Nate, if you want to, we can give them a few picks here at the end of what may be the best way to play October. I'm actually going to give you guys 10 trades, 10 stocks that you can trade this very month, hopefully for some great gains. And I'll give you all the details so that you can easily pick the options. So we'll be plenty of opportunities to take screenshots here. So there's things like presidential patterns. I'm not going to spend too much time on this one. If you've been coming to the opening playbook, we've been following this one all year long. This does not tell us exactly what's going to happen without a doubt in the S&P this year, but it does give us a good gauge. In fact, other than August and September, which the markets went higher those months, they're typically down. Other than that, we saw this pattern play out to a T this year, just a little bit more extreme, right? And historically, look at this, October, November, December. Ooh, that's something to be excited about. But here's a chart you may want to have here for 2-3 years from now. How does the S&P typically do in the final year of the term? We're still in year one. We still got some time. But why don't you go ahead and screenshot this one now, bookmark it, and pull it out here in a couple of years, because we're going to be playing on this red average here. It's going to be open field running for presidency. And look at this. Typically not so good of a year. Some uncertainty there in year 4 going into the new election cycle. Definitely something you want to know. Definitely something you want to keep an eye on here in a couple of years. Does anyone know what typically happens in the middle of the term? Most people don't. I had no clue, not until I saw the data. There's actually a sweet spot here about a year from today where historically we see the biggest gains in the markets. Now, I'm very, very bullish over the next 3 months, over the next 12 months. I'm going to walk you through that step by step here in a moment. But this will be nice to know. Again, just ask Siri to remind you here in a year to pull up that mid-cycle presidential chart, because this is something you're going to want to know. All right, we'll keep on rolling here. There's also daily market statistics, right? The overnight effect. Nate, you know this one pretty well from the overnight options. Basically, the markets tend to make all their gains overnight. During the day, there can be up days, there can be down days, but net, when you add up all the middle of the day trading over the last 32 years, the markets have gained nothing. Because one day they'll be up 0.5%, the next day they'll be down 0.5%. Versus if you buy at the close and just sell at the open the next day, look at this. It's all of the market gains right there. These are things you just want to know. The weekend effect. Friday to Monday, typically. Monday, we see the markets down. We see the markets fade. We see some repositioning. Tuesday, Wednesday, Thursday, Friday, very, very good. This is kind of the one of the bases behind our shotgun trades, which again, I went very aggressive last week. Nate normally gives a little bit something safer, but this is the general premise. Hey, stocks tend to drift higher on Friday. Look how bullish that is. Second most bullish day in the stock market. So maybe we can go Thursday to Friday, catch a little drift here and make some money. There's also macroeconomic data to consider. And I'm going to walk you through some of the charts right now that are pointing out to me to give us a good idea. But we have data about rate hike cycles, end of hike cycles, what happens when they start cutting rates, all sorts of data to consider. Things like volatility averages, which funny enough, we know October is very bullish, but also seasonally, VIX tends to spike in October. That doesn't really make a lot of sense, but it's just good data to know here. For the 60-minute income trade, that's definitely good data to know because that helps us with our trades. We like when volatility is high. How does the stock market do over the summer? How does it do when it makes 5 winning streaks in a row, 5 winning months in a row? All sorts of market data. You can kind of get lost in the sauce. I love diving into it. I love looking at the numbers and trying to stack up the odds. But I just wanted to give you guys a little taste of things I look at and that we'll continue to look at each and every week. This stuff gets me pumped up. I try to bring you guys the most pertinent information each and every Tuesday for my market outlook. So tomorrow you'll see some new charts, some fresh charts, some really cool data to give us an idea on what may be going next. Now the key here, this is my favorite analogy I've ever come up with. Key here is not to get paralysis by analysis. We don't want to be overloaded to the point where we can't think. Instead, we want to layer in a few very important data points to really see the full picture, to really get a gauge on what's about to happen next. So here's my awesome analogy. National Treasure, the movie. If you haven't seen it, you should watch it tonight. Great movie. Love it. I always wanted to actually, Nate, I think as a kid, the bulk of my dreams at night were finding treasure somehow, somewhere. And I'd find it, I'd get a bunch of gold, and then I'd wake up and be sad. But hey.
Well, now you're still trying, just in a different place.
That's right. That's right. That's so true. In National Treasure, I can live through Ben Gates, who is trying to decipher the map to locate the treasure. If you remember, by looking at the map with the naked eye, you couldn't see anything at all. It was a hidden ink on there, whatever it was. Just like how looking at the stock market without any supporting data, I think, is a huge mistake. We're just blindly going in hoping for the best. But with his special glasses made by Ben Franklin, he could start to layer in different information from different lenses. So the red lens gave him the text he needed to know to solve part of the puzzle, right? Drops in the red lens, some text pops up on the map. Oh, drops in the blue lens, he gets another piece of information on the map. The green lens comes in and it shows some pictures of how to find the treasure door. So on their own, each lens was powerful. Each lens served a purpose. Each lens gave a different angle, but ultimately only one lens could get him so far. But by layering the different information from the different views all together, he was able to put the pieces together and then find the next most likely step and move to make. That's the same thing we're trying to do in the stock market. While each data point can be powerful on their own, we really don't get a clear and compelling picture until we start to layer together to solve the puzzle. And I'm going to do that here in a moment. I'm going to pull up what I'm calling the 5 most important charts in finance right now. That does not include my gold prediction and Bitcoin prediction, which I will do at the very end of today's class. But first, I wanted to walk through the data and give you guys a good outlook of where I see things moving right now over the next couple of months. Jason's asking if we can do shotgun Monday. The problem, Jason, you can do it in like the S&P and the QQQ, but you like individual stocks don't have daily expirations, and that's where I think our sweet spot really is.
Yeah, at least for now they don't. Probably coming soon. Some of the big dogs.
All right, Nate. I've got more data to cover. I've got predictions to cover. I do not know if you had anything though. I did not want to cut you short today. I am going to give you guys some trades you can take today.
Yeah, I mean, why don't we? You said technology and industrials are the two big dogs you're leaning into, right?
Mm-hmm. Technology is number one by far. It's just a beast, and it's like also perfect in line with our AI melt up catalyst that we got going.
Yeah, I do like RTX. It's one that we've traded. I think. I mean, if anyone's traded RTX like super consistently with the income machine, let me know. It's been a top ranked one on the income machine pretty consistently, and I believe for the last 6 months you wouldn't have lost a single trade on RTX on the income machine. I think you could have just literally gone like 30 for 30 on RTX. So that's one that's still at the top of the list that I think is worthwhile. I'll shoot this one out for you real quick. I know, Graham, you're mostly going to be focused on technology, so let me give an industrial one real quick right here. So there it is. You see RTX right near the top of the list. Like I said, it's been there a lot. And it actually has decent option volume too. So it's a pretty decent one to trade. Right now ranked as a 4 out of 5. You can see the only thing it doesn't fit is that snapback position right now, which just means it's full momentum and hasn't had a pullback on any time frame of note. And so then we can look and we can take, how aggressive or conservative do we want to be here with RTX specifically as it goes through and works through those option chains to try to find us an opportunity. Here's the balance one with about a 15% ROI. That's a little bit low on the balance side, although it is a pretty nice cushion. I probably like the other one a little bit better, but I can pop and give you this one here first. Again, 5% cushion is nice, but I would say typically for me, I'm going to look for a little bit more ROI on the balanced one than I'm going to go for on something like this. Sorry, I'm talking and typing at the same time. Balanced one is the first one there in the chat. And then this will be the more aggressive one where you can get about a 50% ROI and still get a decent 1% cushion here. You're still below price. You're still going to be in position to make a nice 50% ROI there with the a little bit more aggressive. Now, again, my definition of aggressive here is still a relatively safe trade with a cushion below it, which would be very different than Graham's definition of an aggressive trade. But those are the two there. You can see the kind of the profit matrix comparison if you want to look at that as well. But that's RTX for you. Obviously, Graham, I know you're going to give some other opportunities here, but a lot of tech at the top of the list here too. Mm-hmm. Google, Microsoft, TSM, Intel, Apple, lots of tech there at the top of the list on the income machine as well.
I love it.